Everybody, can you hear me? Well, let's begin the PIDE webinar. I think fifth webinar on railways. Railways is a very important subject, which we have to take up and which we've been trying to study for the last 6 months. Amir Durrani has been leading this effort. Amir unfortunately can't make it today, so I am moderating the session. My name is Nadeem Al-Haq. The railway subject of railways, as I said, is a very important subject. Pakistan used to be a major railway network, featured on BBC as well a long time ago, but now unfortunately we are not doing so well. So we're trying to understand what's wrong with our railways. So today's webinar, we're going to discuss how railways are being financed in the 21st century. I can't pretend to know much about railways, so I will certainly not pretend to know anything about railways. Let me just welcome our webinars. We've got our webinar participants, our speakers. We have Martha Lawrence, leader of the railway community of practice at the World Bank. We have George Kaulbeck, Global Director and Partner Transport, SPCS, Solutions for Growing Economies. We have John Bouwer, Chief Operating Officer of MavLOG. We have Mazhar Shah, AGM Traffic, Pakistan Railways, and we have Dr. Farooq Hyder Shaikh, Advisor Executive Director, Business Planning Railway Partners. Business Planning Pakistan Railways, sorry. So we've got a very good panel, eminent panel. I will not, as I said, pretend to know anything about railways. I'm just moderating the session and very well prepared to learn. So folks, I will certainly defer to you. So let's begin. Martha Lawrence, would you like to begin, or who would you like to?
Sure, I'll just share my screen.
Go ahead.
There is no magic to railway financing. I say this because people often think that a railway's problems can be fixed with some fancy financial instrument that pulls money out of the air and doesn't have to be paid back. And unfortunately, I'm here to tell you financing doesn't work that way. Financing is always a product of funding. And funding is your stream of revenue over time. For railways, funding generally comes from 4 sources: passenger tickets, payments for providing freight services, government subsidies, and providing other services like track access or advertising in passenger stations. Most railways get their funding from multiple sources. And here's just one example. Polish railway funding comes from a little over half from freight, a quarter from passenger tickets, another piece from passenger subsidies, and another piece that includes other activities, including providing infrastructure access. So financing is the conversion of that future funding, that stream of revenue over time, into money now. If a railway has enough funding, financing generally is not going to be a problem. We bankers can cook up many kinds of instruments to convert the funding into financing. Now, funding can be raised from the private sector based on the funding and financial strength of a government, a corporation, or a project. And by far the largest pool of financing raised worldwide is sovereign financing, government financing. Typically, this is the cheapest financing, but it's often not available to the railway because governments have many priorities. Worldwide, sovereign financing amounts to more than $100 trillion annually. And of that, about $1 trillion is what's called official development assistance, which includes loans from organizations like the World Bank. The second, but smaller, but still very significant pool of financing is corporate financing. This is financing raised based on the funding and financial strength of the company or corporation. It's finance based on having a financially viable and not too risky state enterprise or corporation for the railway. And then the last pool of financing is project financing. It's based on the funding and financial strength of the project. In emerging markets, project financing through public-private partnerships have raised a bit more than $10 billion per year on average in recent years. And you can see from the perspective of a lender that the risk typically gets greater as you move from lending to the sovereign, which has many sources of revenue, to lending to the corporation, which has all the activities of the corporation, to lending to the project, which just has one activity. And I'm speaking about this because when trying to attract private sector financing for railways, people often jump from sovereign financing to PPPs. But in fact, PPPs leverage the smallest pool of financing, and PPP financing is typically the most expensive. So it needs to be used very judiciously. It's best to use PPPs when project delivery will be improved by involving the private sector, not primarily as a source of financing. So let me just clarify this with a couple examples. The Eastern Dedicated Freight Corridor in India, which I have been working on for the last 5 years, is an example of sovereign financing. In one tranche, first, the government of India has provided money to the Ministry of Railways, which invested the funds in DFCCIL. And these funds are accounted as the government's equity in the corporation. Second, the government of India has directly borrowed money from the World Bank and from JICA for the Western Corridor for these projects and on-lent it to DFCCIL. And then third, the company itself has borrowed money from the World Bank with a guarantee of the government of India. All of these forms of financing count as sovereign financing because the financing came from the government, the sovereign, or the financing was borrowed and on-lent by the government, or it was guaranteed by the government.
अच्छा वो मदर शाह साहब को ना आवाज थोड़ी कम आ रही है अगर आप जहां होस्टिंग हो रही है वो उसको आवाज को
I'm
थोड़ा
hearing
बड़ा कर
someone speak. Could you please mute?
ठीक है
So here, the corporate financing, here are some examples of railways that have raised corporate financing. Some have raised all of their financing from the private sector. The first 7 in this graph, North American railways have their equity stock traded on public stock exchanges, as well as debt borrowed from the private sector. Others, such as Deutsche Bahn, the German railway, or RŽD, the Russian railway, or China Railway Group, have equity that is government equity. So they mix sovereign with a substantial amount of debt borrowed from the private capital markets. So in terms of scale, counting both debt and equity, the first 9 railways have $270 billion of private sector financing. If we include China Railway Group, which is on a different scale, an order of magnitude larger, the number comes to $985 billion. So quite a lot of financing in corporate financing. And then here's just one example of project financing, where Mexico, between 1996 and 1999, concessioned its state railways into 3 major and several smaller railway concessions. And here the purpose was primarily to improve the performance of the railway. But the concession brought the government over $3 billion in concession fees, and the concessionaires have invested considerable amount of money in upgrading the assets. And obviously, project financing can be done at a much smaller scale than a whole railway. Station development projects, development of logistics facilities, industrial lead lines are all examples of project financing and that occur in many countries. And let me also just reemphasize that a PPP is not really a financing instrument. it's a project delivery mechanism that has some private sector financing attached. So PPPs are based on projects or corporate entities whose finances can be ring-fenced. And on the good side, they transfer risk. And they can be really effective when the government wants to deliver a service or a project through a partnership because the private sector brings some skills or market orientation or efficiency that is desired. On the con side, PPP financing is typically more expensive than sovereign or corporate financing because the investor's only recourse for payment is the project. And they can be complex to design and tender, and they require ongoing capacity to supervise effectively. So you have to weigh the pros and cons. And if only financing is needed, then PPP may not be the best option. Now, typical financing instruments are loans, bonds, stocks, and leases. And nearly all financing instruments are some permutation or combination of these basic types. And the thing to remember, though, is none of this is free money. Whatever the instrument, the money has to be paid back with interest or dividends. So for the railway to be financially viable, the investment needs to be profitable enough that it can pay back the financing over time. Or if they're social investments, the government must provide sufficient funding to enable the financing to be paid back. And these basic types of financial instruments are used broadly across sovereign, corporate, and project financing. I would just note that sovereign and corporate bonds and corporate stocks are often traded on exchanges, and this makes them more attractive to investors because they're more liquid, meaning that the investor can exit the investment when the investor wants to. And one other note, there's been a lot of talk lately about green financing, and railways have tapped into green financing through green bonds. And these are essentially bonds like any other bond. They still pay interest and principal back at the expiration of the bond. But the railway uses the funds for a green purpose, validates that, and is therefore able to attract a pool of investors who want to invest in green activities. And then when we're talking about financing, I have to say a quick word about risk. Private sector investors don't like it. The more risk, the higher the cost of the financing. And if the risk is too high, the railway will not get financing. So an important part of financing railways is reducing the investor's perception of risk. Government can help by creating an attractive business environment, having transparent and fair sector governance, and through seeing that the railway company, and it is a company in most places in the world, is managed in a commercial fashion, even if it is owned by government. So to just summarize, if you ensure that the railway has adequate funding and manage the risks around investing, financing is easy. It's not magic.
Thank you, Martha. Thank you very much. It was a very concise summary of financing. One question that I'd like to ask you, your first slide talked about the earnings of railways from freight, etc., tickets and things. The question that comes to my mind, and especially in Pakistan, first of all, in Pakistan, there's no such thing as a company. It's a railway department, a railway, I don't even know how to define it. Just a government department that overemploys people and that has no yardstick of profitability or efficiency or anything, but that's besides the point. I think one thing that I noticed, not only in Pakistan, but every country, railway owns some of the most prime real estate in the country. It tends to have huge, very significant portion of city center land in the form of stations, and can have more than one station, as in many cities. Is that, how do you see that as a earning option? I didn't see that on your chart. Is that a significant portion of the railway's earnings? And can restructuring of that asset generate more financing or not?
Yes, absolutely. Absolutely. You know, the sort of classic example of that is the MTR in Hong Kong, where it is a commuter railway, but manages to be financially sustainable because it develops real estate around the stations in a very systematic way. But you can look all over the world, whether it's Europe or North America, or India is now working on this as well. The stations and the goods sheds are a huge asset that could be very logically developed as a PPP with companies from the private sector that know about logistics for the goods sheds or know about how to manage real estate. And there are many, many examples of the railway benefiting from developing this real estate.
That's good to know, because in Pakistan, railway totally resists developing any stations. We are a 220 million people country with very good railway stations in the middle of very well-trafficked areas. And as well as there's several tracts of land that railway officials for use for their personal housing that are also in the middle of the city. So there's a large amount of railway property that can be redeveloped to significantly alter the balance sheet of the financing of the railways. But I'd like you guys to speak on that. So can we go to George? George, what would you like to talk about? And how can you tell us that railways, I mean, yes, they can finance it through bonds and other means, but how about restructuring the railway balance sheet? Is that a source of financing or not? George Kaulbeck?
Please unmute yourself, George.
Can you hear me?
Yeah, we can hear you now.
Can you see my screen? My presentation?
No, not yet.
Yes.
Not yet.
Yes, sir, we can
okay,
see.
great, we can. I think we are beginning to see it. Good.
Okay, I can't see it, but that's okay. Okay, thank you, Nadeem, and thanks, Martha. I think my presentation and focus dovetails nicely with Martha's, in that there is a little bit of overlap at the beginning, but I think it more focuses on urban railways, passenger rails in particular. So I think it's a nice fit. So I think as similar to what Martha had presented on, I'm going to focus a little bit on just the difference between funding and financing, because that's critical and often misunderstood. Railways are very capital intensive, as most people know, and basically you recover your cost, recover that investment over a long period of time. As per this cash flow diagram you might see on the screen there. Quite often, as in the example of Class 1 railways, the downstream revenues and profits are sufficient to cover those investments in infrastructure and rolling stock, as you'll see on the left. And then in a very bleak scenario on the right, the investments are significant relative to the downstream revenues, and will never be sufficient to cover that investment. And this situation is even more bleak because the revenues aren't even covering the operating cost. So that's basically funding, is do the downstream revenues and profits are sufficient enough to recover the initial investment in infrastructure and rolling stock. So funding refers to the sources of revenue or other income that can be turned into cash and used to pay for a project or services. Includes, but not limited to, cash flows from delivery of rail services, whether they're freight or passenger, ancillary or other income, and that quite often could be, and we'll talk about it a bit, particularly at railway stations or onboard passenger trains. And then non-rate payable government grants or subsidies, and this may be in the form or for the reason of social benefits that may be that rail may provide, and typically this would be the case of passenger rail services, where the government recognizes the social good of the passenger services and provides a grant or a subsidy to the railway. So financing is something different, and obviously they're related, but financing refers to the financial tools that can be used to access money to pay for a project or service against future cash flows. So generally speaking, if the project, the railway is well funded, financing is not a problem, and it is available as indicated by Martha, in many forms, from debt, equity, capital leasing, and so on. And this image here, or this graph, indicates just the flow, financing to provide the capital cost, which relates in on operating revenues, and if there's significant enough net profit or significant enough profits, it will drive a profit for the railway, and as well as be sufficient enough to pay back the financing, the debt, as well as any interest earned. And again, this would be the graph of such a scenario. Future revenues from operations are sufficient to cover costs and provide a return on financing. And again, this would be the case of Class 1 railways in North America. Now, in a scenario where the downstream revenues aren't sufficient to pay for the initial financing, both debt and interest, you've got a funding gap, and that can be rectified in one of two ways. In terms of, on the left, a capital subsidy or public funding for capital cost in one way, or an operating subsidy. So an annual cost or annual payment to the railway to cover not only its operating cost, in addition to its revenue, not only cover its operating cost, but also to pay down the interest and debt from the initial investment. And this you'll see here, represented by this graph, is a case of a funding gap. So the remainder of the presentation is focused on alternative funding and financing mechanisms, largely pertaining to urban railways. So opportunities to increase revenues from rail operations, projects, or related assets themselves include market pricing to maximize fare box revenue. So you in terms of looking at a project, are there opportunities to increase the revenue being generated? Commercial property development or joint development of stations, onboard or in-station retail concessions, branding, or station naming rights. So this is looking not at the funding gap, but how you can increase revenue flowing to the railway. And a few examples here. This was a project we worked in Toronto, where the air rights were sold to the Union Station, and it was developed in Toronto, and that was a source of revenue to the railway. Similarly, in Switzerland, Starbucks is on board, and they advertise it on the outside of trains. And then now we're looking at we're now looking at what can be done, if there's still a funding gap after all sources of revenue to the railway are maxed out. And there's a number of vehicles available, value capture mechanisms, station parking charges, road tolling, congestion charges, personal vehicle related charges, sales tax, dedicated payroll tax for business and urban centers, and carbon credit. So the first couple we're going to look at in a little bit more detail. This here is a proposed LRT line from Toronto, or just east of Toronto, west of Toronto to Hamilton, and we identified within a catchment area of the rail line land as it was currently used and or zoned as a way to assess potential for land value uplift capture. And really, we looked at three potential mechanisms for capturing land value uplift. The first was incremental property tax revenues, where real estate within the catchment zone there was a higher taxation added, property tax added. It's also called in the US tax incremental financing. And again, it's just a slightly higher rate to the property tax in those areas, and that is used to provide a gap funding to the rail line development, in this case, an LRT line. A similar type of tax is just a one-time surtax tax, or maybe over a course of a number of years, charged to property owners, and as well used in a similar manner, flows to the railway as gap funding. And the last one, and one that I think became the biggest focus, was a special assessment district fees. So development fees, I should say, whereas areas around within the catchment area of each station, where any land developments were charged a fee that again was used as a gap financing for the project. So that in this particular calc was deemed the most effective, and is what been the focus of their gap financing. Other type of potential revenues are congestion charges. You see this from London, or revenue for gap financing. Incremental sales tax dedicated to rail projects. This would be the case in Virginia to support a freight rail line leading to the port. And lastly, looking more at a larger scale, global possibilities, bilateral agents could also help reduce funding gap through infrastructure grants. So this last slide just summarizes the various financing mechanisms. This is a slide that I condensed, so we didn't get into financing as much, as well as funding mechanisms to increase revenues to the railway. And lastly, down below is the public revenue or funding gap funding mechanisms that could be used, including land value capture. And that is my presentation. Thank you, and happy to take any questions.
George, all this presupposes that there is a balance sheet and an entity that looks after the balance sheet, and that somebody owns the railways. So we know that Warren Buffett took over, what was that railway, the famous railway in the Northeast?
Burlington Northern Santa Fe.
Sorry?
Burlington
So he
Northern
took
Santa
over.
Fe.
Right, and he took over the railroad and he restructured, made a lot of money out of it. Now, in a country where railways and a government department, and people are just graded officials in public sector grades, and they're risk averse, and they also know they operate under government rules. World Bank, for example, gave us a very strange public procurement law under which we can't function at all. So how do we deal with these structural problems? Will it require a lot of restructuring? Can we even look at these financing options without being able to think about what our railways are?
Based on my experience and recent experience in Africa, what I've seen is there's probably a greater interest than I've seen before, and from different entities, private sector entities, on participating in the railway, and that ranges, and these in most cases, and these are not only just railways that are looking, that are concessions, or are or have a private sector proponent already. We're talking in a lot of cases government railways, and I think there's some lessons to be learned there. Certainly in rolling stock, there's been a broader interest in leasing of rolling stock by some companies with significant funds to invest, as well as delivery of services in many of the countries we see, particularly Southern Africa. What we're seeing is private sector entities providing providing rail services beyond that of hook and haul on the main line, where they're taking responsibility for terminal operations for shippers, and as well as overseeing the delivery of those products along the mainline service as well. And lastly, as I think we touched on in this presentation, and Martha alluded to, particularly in passenger rail, nation development in the private sector is a really fabulous opportunity for enhancing revenues or addressing gap funding that may exist with railways, and I suspect that could possibly be the biggest opportunity for Pakistan.
Great, thank you. Johan, let's turn to you and look to you for some solutions for railways. Johan, please. Johan Bouwer, Chief Operating Officer, MavLOG.
All right. My screen visible on that side?
We can see
It's coming on screen, yeah,
presentation.
visible.
Is it visible there?
Yep, it is visible. Go ahead.
Okay. Yeah. Just going through it, this dovetails very well with the two previous ones and also the questions you've been asking. When we look at the railway per se and where the money is flowing is what I am actually looking at here. So I want to have a look specifically at the regulatory model, because ultimately it comes back to the question you just asked, is who is asking for the money and what are they putting forward to actually pay back the money that's been borrowed. And that goes back into the funds generation as was just discussed now. And specifically in the regulatory environment, the various portions in the railway where you actually make the money and how that actually comes back into the entity. And then just touching on finance, and I'm using Transnet in South Africa as the example there. And yeah, having worked on a lot of projects there, I had to go and dig deep to see what's in the public domain and what I'm allowed to share and what is private info. So all of that was cut out of the railway and Transnet presenting to the South African government and the annual results presentation per se. So just going to run through it and I think the questions and that a lot of dovetailing onto where things are and what's working and not working. Ultimately, the regulatory model is, as I've shown here, this is African Development Bank about 4 years ago did the survey, but it actually gives a very good view of what the regulatory model do. And if we look here, just if you go to the right, you'll see the business model is operate and maintain rolling stock and then going down to infrastructure ownership. Now, if you look in Southern Africa, South Africa per se, the Transnet is corporatized. They were corporatized in a state-owned entity in the early 90s. Separate balance sheet, and the balance sheet is used for funding. Our neighboring countries, Botswana, pretty much everyone sits in the same boat, with some concessions now starting to come in on Mozambique and that. But when you look at the private sector participation, you'll see that East and Central Africa really does a lot more and has gone down the road a lot further in and who actually owns the rolling stock. The interesting thing is when you look at the bottom, infrastructure is always owned by the state in whatever vehicle. And that's just from land ownership, history, and obviously the heavy investment there. Then just here to the right is the business model. This I picked up from Mercer Consulting back in 2004. And even with all the toolkits and that I've worked through the years, this one for me summarizes where railways actually make their money. And on this one, I did a presentation to University of Johannesburg a few years ago, and we ended up getting stuck on this slide for over 3 hours. So this one is the only one I could have presented, and I can talk to you for quite a while on this. When you look at the railway and where it's making its money, sorry, here at the top you can't see now. It's what level of separation is there. In South Africa, it's a vertically integrated railway. I'm not too sure how to move that away there. So unfortunately, when the presentation gets circulated, you'll have to just have a look at that. But in the organizational and institutional separation factors in railway separation is where we're looking at. When that comes in, it gets back to who's the customer, whether it's a rail from a freight perspective or a passenger perspective. It always comes back to who's the customer, what can you do to get competition up, and how does competition actually stimulate revenues, and is that revenues enough to generate funding and that. When we have a look at that per se, the PSPs you see here is an outlier laying on the bottom, and as Mazhar has said, seen as the proverbial silver bullet that private sector will come in and save everything. Just some of the mechanisms here on the right set out per se. But when you go through the decision tree, it actually comes through who owns the access and how does that access give right to an operator that moves freight, and how does that in its functionality give rise to who moves the freight and who makes the money on the movement of freight. And ultimately, the railway is just a different mechanism to transport goods and people. And yeah, looking at just scanning through some of the previous webinars, I can see it's a very emotive subject in Pakistan, and where the railway is and where they should be. So I just wanted to get this and where you make your money in the railway, and that money is the basis for the funding. And my screen's just hanging on this side. So I want to have a look now specifically at here where the operator plays, and just a bit of thinking around the concepts of where the railway and who can make money in a railway. So I'm here now looking at the business model and not only the regulatory model and what funds are being generated. So when we look at it, the customer underpins everything. The customer ultimately brings the value to the railway, they pay the tariffs and they pay the way. Whether it's a long-term mining project, whether it's general freight movements, whether it's pit-to-port movements, and that in South Africa. And Africa is mainly where the big money in the railways are sitting. We then go through what sits in the operations. And if you look at the top there is who owns and what do they actually do in the railway. Is it a marketing and selling? And I'll go through each one now as we go through what the different role players are. Just for clarity, this isn't exhaustive. If I try to fit everything on one slide, it'll be so small, nobody will be able to see it. So obviously the customer, he just has goods to move, or he has to move himself or herself from point A to B. They really do not care. They just want to have a service and be able to move. But again, the most important person, they the ones that ends up paying the bills. A railway broker, again, not involved really in the railway, but selling the service. And we in Africa have a lot of them where the coordinating of the services, specifically on the freight side, is needed, where all the parties come in. You then talk right through from terminal operations, road hauling to railheads, and moving goods through to the ports, specifically for the export side. Very important role, and they do it for a fee, a commission, or however they do it. When we look at Hook My Wagon, just going into the rolling stock side, as I said, I'm looking specifically at the operating side. The ownership of the wagon and the money is being made more on the usage of the wagon. Run My Rig, again, could be an investor, could be a person in the railway and owns a locomotive and a wagon, and operations doesn't need to be done. A straight asset owner and provides the assets to the railway to utilize. We then get into the independent operator and we start stacking up now. It could be a dominant operator, and most countries start with a dominant operator that actually evolves over the years into a more competitive view. And that's where the concessions of certain portions of the line, certain geographical concessions are usually the way that things evolve. And that could be done with or without rolling stock. We then get into a traffic manager, access and integrated operator. Now, the traffic manager really makes his money by moving trains, ensuring train safety and getting traffic through, whereas the access manager also starts looking not only at the safe working and capacity, but using access as a method of controlling the railway, access to the railheads, and not only looking at mainline and mainline working. Integrated operator, as I said, that's where I grew up in. It's an access manager, own everything, and with that, get a bit stagnated in the thinking, where you believe that you have to own it to manage it and control it. And that controlling and managing is what I tried to show you guys here, what is open and what can be used. So the infrastructure development, maintenance could sit with the operator, and a lot of the concessions are structured around that, where rails have to be rehabilitated and that risk and infrastructure upkeep gets passed on to the operator that's running on that line. But infrastructure development can sit with the operator or the owner. Usually most of the European countries and a lot of the African countries try and keep it in-house and get the infrastructure to belong to the government. New developments, and that could go through to the mines and concessioned out, and those concessions usually 20 to 25 years, reverting back to government ownership. So the classic build, operate, transfer type environments coming in there. And then this is really a view for above and below rail, and that below rail tends to be state-owned and pretty much reverts back to the state depending on how the concession or lease around that is structured. So yeah, that in itself is the business model, and this just dovetails into the two previous speakers. What they're saying is there money to be made? And the question you ask, who owns the balance sheet and what are they putting forward when you go to a bank? You just don't go to the bank and ask for money, you walk out with nothing. And on this slide, I specifically just highlight that which is what each of these are making. I've just put the main focuses in there. And then when you start talking to the financiers, what are you actually putting on the table? The customer, his demand, his future take or pay contract, specifically on the freight side, a 10 or 15-year contract with pricing mechanisms and profitability mechanism, cost sharing mechanisms are usually favorably viewed by the banks. You have a guaranteed offtake, your assets that you are financing, your operations you're bringing are guaranteed and underwritten by a customer. The rail broker per se becomes a difficult one to finance because they don't own much, although they own the rights to a lot. And that could evolve into some concessioning and capacity availability, again, depending on what are you selling to the bank. And then as you go up, it's always easier to finance when you have assets and project cash flows to put on the table. And with that, you can have a constructive discussion with the financing institutions. Here, I just put the Transnet balance sheet up. This is 2020 financials, 2021 not released as yet. And it comes back to the risk considerations of the country and the tools, as discussed earlier, that's available. And you'll see that Transnet focuses on its balance sheet, and it's very little government guarantees. The only guarantees really there dates back to the 1990s. Corporatized, and on the project development and balance sheet actually secured finance and continue in the investor roadshows to do that. When you look at it, you can see the basics gets allocated and spoken to. What is the funds at the beginning of the year? What's my repayment profile? What money do I need? Again, in a developing economy, a lot of exchange differences that has to be accounted for, and the volatility of borrowing rands and dollars really comes through here. You can see here 127 million rand to the rupees around 11, just gives you a sense of the size that you are looking at here. And yeah, you go back, you have to go back with the balance sheet, you look at the gearing, and with that, if everything is really much easier to present, you can't go with an empty hand and just say, please fund me. There has to be some underlying business and underlying asset that you are funding. Not going to bore you with this, but again, comes back to the risk side. What's your liquidity? What's your funding forecast, the funding needs? What's your redemption, big capital expenditure, and money you would ask for at the end of the day. Transnet discloses all their methods of funding. You can see here at the bottom, 69 million relates to bonds that are floating in the market, both locally in South Africa and international market. A lot more detail on bonds and that in the statements. I just didn't want to bore you guys with that specifically. Interestingly, Transnet does a lot of commercial paper, so they substitute overdraft commercial paper, look at the short-term funding there, and then a lot of DFIs and ECA funding. The ECAs specifically, when you go through the list here, with a lot of the imports of rolling stock out of North America and China, you can see the Chinese Development Bank, a big tranche of money through for the funding of the locomotive acquisitions. when you look at the development funding institution, African Development Bank, also actively participating. And yeah, it just gives a view when the Treasury goes out, they go on Investor Roadshow and try and marry the operations, underlying assets and projects with the investors and the financiers. I just put this one in to get a view of where Transnet is. It comes back to what Martha was saying, funded. This just gives a view of the railway from the port of Durban through to Gauteng, the economic hub in South Africa. You have 670 kilometers of main line that you have to travel on. And now you'll see my cat walking into the picture. So I hope you all working from home changed a bit of the dynamic there. Now Transnet here specifically are starting to look at what can be done other than we own everything and we run everything. And on the back of that, they're looking at the back of port operations, what more can be done on the stuffing, destuffing, running of the main line. And here, specifically, the two big ones looking is wagon ownership, starting to see what can Transnet do to move wagons off the balance sheet, running to some leasing, and then ultimately further down the line with the hook and haul. You'll see branch line concessions also there actively driven. And these are ones that's in the market as we speak. And this was disclosed to the Parliament, as I said, around 3 months ago, and actively pushing to get these projects off the ground into the market and find co-sharing of risk and funds. Yeah, if you look at it, this is the last slides. Again, multiple funds coming through. With the funding, you can look at the different financiers and financing options. Comes back to government involvement. Not going to bore you with this, already spoke through that. And then the continued involvement. The regulatory environment really drives what options of finance becomes available and what funding flows are coming through. So yes, the separation of commercial activities is that always seen as a good option. Again, it depends on where you are in the involvement and whether that's a step too far, a step too quickly. As long as there's commercialities, you can always find someone that be willing to run the railway and fund the railway as such. Yeah, and that's it from my side. I'm free to take any questions there.
Thank you, Johan. That was very, very comprehensive and very good presentation of how complex the railway activity is and how it can be a set of contracts and a set of activities between various participants in the economy. Now there are different financing options. So all of you have pointed out the complexity of railways. I guess it's no different from any other big business. All businesses are very complex and all businesses require different transaction mechanisms and different financing mechanisms. So let me just turn to the Pakistani side now, and let's see how they do. Let me quickly turn to the Pakistani side. I know that Martha and George have to leave without us being able to use them well and ask questions, but let me bring in Mr. Farooq Shaikh. I know Mazhar Saab cannot make it. Mazhar Shah Saab is traveling on the train. So Mr. Farooq Shaikh, Advisor, Executive Director, Business Planning, Pakistan Railways. Can you please tell us how you see all this and what is Pakistan Railways like?
Sir, Farooq Saab, sir, kindly अपने आप को unmute कर लें, sir.
Hello, Assalamu alaikum. Am I audible?
Yes,
You
sir.
are.
And is my screen visible to everyone?
It is visible.
Okay, perfect. So thank you very much, Nadeem Saab, for the introduction earlier and giving us the opportunity to come and share about Pakistan Railways. And just to put things in perspective, we are very glad to learn that PIDE has taken this initiative. Unfortunately, we came to learn about this seminar just last evening. But nevertheless, I must compliment and congratulate PIDE for taking this initiative. And I'm glad that now we are also part of that and we can work with PIDE in future very closely to take this discussion forward. And inshallah, we will make our every effort to support this initiative because Pakistan Railway is on a transformation journey. So my presentation today, as I've gone through I've reviewed, I was going through when the August speakers were, the honorable speakers were talking about the financing portion, and they have talked in length about a lot of things. So rather than repeating those things, I have cut down numerous slides in my quick presentation, and I have focused more on the three areas. The one is what is the current state of affairs at Pakistan Railways and how we are evolving as a customer-centric organization and what is our transformation journey. And I have linked the sources of financing with that transformation journey, that how we are capitalizing upon that financing part in our transformation journey to address the core topic of this seminar. So I will take you through this presentation, and I'm sure that I will be more than happy to take the questions because this is related to Pakistan Railways. And there are a lot of questions which needs to be answered on our front. So we are still struggling ourselves as well regarding that, and we would like to seek help from institutes like PIDE as well. So let's move on. The flow of my presentation is I will start with the sources of revenue, because when we talk of financing, revenue is the key driver for that financing, and what are the main sources for revenue. Then I will talk about the key challenges. What are the key challenges which we are facing as an organization? Then we will talk about the Pakistan Railways transformation journey and highlight what are the core areas of our transformation journey. And then, the order got misread. So I'll talk about the quick strategy first. Then I think it was because of the animation thing. My apologies on that. So I'll talk about the current strategy, how we are evolving this organization, what are the key challenges which we are facing. And rather, I will talk first about key challenges and the strategy part later, and transformation journey, and then the sources of funding in 2021 and how we are evolving and taking a long-term view of this organization. So let's start with a quote. I would take the opportunity to say that there is a lot of negative perception about my organization, that is Pakistan Railway, and I've come from a private sector. I've spent my 28 years in private sector, both in Pakistan and Canada, and I have joined this organization, and I've taken this assignment as a mission, as a passion to transform this organization in a different way and change this perception, negative perception of Pakistan Railways. So with the quote is that if the doors of perception were cleansed, everything would appear to man as infinite. It's a William Blake quote. So I'll build upon my presentation on this quote. So present situation is that in 2018-19, our total revenue was 54 billion and revenue sources were passenger 29 billion, freight was 18.8 billion, sundry, which means other revenue, branding and all other elements, land utilization was 4.3 billion and other coaching was 2 billion. So this is the total revenue sources, as Martha was also talking about, that these are the core areas of revenue. And obviously, At this stage, we are a loss-making organization. We take subsidy from government to sustain our operations. And the government is also one of the main source of funding. I won't take it as a revenue. It's a subsidy. So that's not part of our revenue thing. And we are, inshallah, embarking upon a journey that we should move away from subsidy. We become a self-sustainable organization. This is the current last year, which concluded 47 billion, and 2021 we closed at 50 billion. So it's some similar numbers because the numbers have not been audited. So I just shared the audited numbers. These are public figures. So 47 billion, again, the same split, 49% is passenger and freight is 40%. And this year, in the year which has closed, we have closed with 21 billion freight revenue, which is a record in the history of Pakistan Railways. Now, key challenges. It is very vital when we talk about Pakistan Railways, we need to understand what are the core key challenges. So when I took over this assignment, I studied the 6 countries' business models. And the closest model which we found, which can help us, is the Indian Railway model. So I studied Indian Railway, I studied Canadian Railway model, I studied Uzbekistan, UK, and US, North American rail models, Canadian Pacific Rail model. So closest was India because they have similar conditions, they have similar type of situation, and the situation was more or less same like us. So we have got great learnings from that model. And rather, we are building upon that model, and we have evolved our own model based on our ground realities and situations. So one is the main biggest challenge is the utilization of our existing infrastructure and available rolling stock. Because when we talk about generating revenue or sources of revenue, I strongly believe that rolling stock, proper utilization can be the main revenue source funding, revenue driver for the organization, and it can generate a lot of revenue. And even we can leverage this rolling stock and generate funding from the financial institutions, and the models are there. So we are moving into the track access side policy where we only manage the track, the rest is all shifted towards the private sector, and they bring their own rolling stock, they invest in that, they bring their own locomotives, they bring their own, they even take care of the fuel responsibility, because fuel accounts for about 20 billion expense, which is about 20% of our total expense. So operational challenges of limited line capacity and old infrastructure. So ML1 project is in the pipeline, but it has not, unfortunately, we have not been able to initiate due to one factor or the other. And I believe there is one seminar dedicated to that. We will talk more in length about that in that seminar. Lack of digital platforms and technology for visibility of our operations. So this is one of the major challenges that we are a conventional organization. We still working on the paper-based model. We have huge files, and when I see and evaluate my time consumption, I'm drowned in files every day. I spend good quality 4 to 5 hours in reviewing the files which have been reviewed by 6 other people, starting from head clerk to everybody, and reaches to my table again, consumes my time as well. Customer centricity and customer focus is missing. So this is the one of the key pillar, and our transformation journey is actually built on 2 main pillars. One is and I'll talk about that in the next slides that will focus more clearly on. So our strategy, how are we evolving as an organization now? It's a bottom-up strategy targeting main 4 focus areas. Marketing and customers is the #1 area. Business management, network investment. So when I talk about network investment means that we have not been able to effectively utilize a huge land available to us, huge infrastructure available to us, and we have not been able to generate, utilize that resources and generate sources of funding and financing for us, which this organization could have been self-sustainable way number of years ago. At certain point of time, we were the, I think there are certain other factors as well. and I would like to put on the table here as well that there are other factors like there is a lack of clear-cut transportation policy by government of Pakistan. Like for India, how they have improved there is a clear policy, a transportation policy that you can't move goods from one province to other through road transport. You have to move within the province. You can do road transport, but outside province you are restricted. Certain commodities are completely restricted. They have to move through traffic. Then they have heavily invested in their infrastructure and they have developed dedicated freight corridors. When they have developed dedicated freight corridors, that means their line capacity on the passenger side is completely vacant, and there's no freight is the main revenue driver for main organization. Right now, we don't have any demand constraint. I have a major challenge of capacity constraint. I cannot add more wagons or because like the current line capacity does not allow me to run more than 15 trains. Presently, I'm running 12 trains. Structural changes. This organization definitely need a major structural change, and my induction is part of that strategy, that it's a hybrid model to bring professionals from private sector and make sure that this transformation journey is taking place in a different way rather than a conventional government style. Our strategy is primarily focused on following key areas, that we will focus on core activities. We are presently running schools, we are presently running hospitals, we are presently doing a lot of other things which railway should not be doing. That's not our job. So we are moving away from that. We have given an advertisement that we are outsourcing our hospitals, we are outsourcing our schools, and we are inviting specialists like healthcare specialists to come forward, heavily invest in that. Like for example, a hospital in Karachi has got 150 bed hospital. So we are asking the private sector to come and invest in that hospital, increase it from 150 bed to 400 bed hospital, and then 500 bed hospital, and add a teaching hospital on that front as well, which will ultimately bring more revenue. It's a 5 billion rupee investment. So we are focusing on that area. Similar is on the school side. Second is the operational efficiency. So operational efficiency is one of the major challenge, and there are a lot of conventional issues like red tapeism, bureaucracy, and cultural change is one of the biggest challenge which we are facing, and we are facing resistance because we are talking different now. We are talking a performance-based organization, which most of the
I think जी आप mute हो गए हैं, फारूक साहब. Farooq Saab, I think, is probably joining us again. He has lost the connection or something. We'll give him a minute and see what happens. Oops. I guess he's lost the connection. So let me invite Johan. Would you like to comment on what you've heard so far from Farooq Sheikh Saab?
Yeah, if I look at it, I don't think this is an easy problem to solve, but definitely a solvable one. The thinking seems to be heading in the right direction. You know, customer-centric. Freight in the railways classically is where you make the money and you can use that to cross-subsidize. But obviously, yeah, freight doesn't vote at the voting boxes. And it's people that actually brings the sentiment to the railways. And that's where your question around the urban rail and the stations and the commuter rail really comes in and has to be clearly articulated. Different operating models for running intercity versus a rail solution with inner city. In South Africa, the organizations were completely split, specifically to keep a focus on the two and not to get sidetracked by the one subsidizing the other. But yeah, if I look at it, the interesting thing that I found there was the revenue increases are coming through. But when you have a look at it, the cost buckets or cost allocation or where the money is spent, a lot on the energy side. And I don't see the depreciation coming through or the capital coming through. So it's just one question I would want to pose is, where's that recovery coming from, or is it being subsidized by the state per se?
The other thing that, Johan, I was surprised at, correct me if I'm wrong, should the railway be running hospitals and schools?
In South Africa, we have a hospital train, but it is run by the foundation. No schools and that being run. There is a school of rail, but that is specialist rail technical knowledge. It's a mini university or college where the specific rail, anything from engineering technicians right through train control, and that sits there.
Yeah, I'm back.
Yeah. Oh, you're back. Okay.
Yeah.
Okay, Farooq Sahab, go ahead. Johan
Okay,
just gave some points. We'll come to them later, but you finish your presentation.
Okay. Yeah, I saw some raised hands as well. I think we will take the questions later as.
Go ahead. You finish your presentation.
Okay. Okay. So focus on core activities, improve on operational efficiencies. Now, some of the strategy parts are linked to the financing, outsourcing of our core business units, and evolve a win-win business model. Actually, public-private partnership model, which will generate a lot of revenue and financing for us. And I'll talk about more in coming slides as well. Identify new source funding through efficient use of resources like land, branding. So these are the areas which we will be focusing upon. Now, when we talk about strategy, customer centricity is the key driver and focus for us. So we are developing a customer-centric dynamic organization. So I would like to highlight the word dynamic. We are right now working like a static organization. When somebody comes to us, generates a query, there is no response, or it takes days. Even people don't respond to emails. So we are moving away from that, inshallah, and evolving towards a customer-centric dynamic organization, which is receptive to the market needs and meet or rather exceed customer expectations. Then technology will play a key driver role, and this will also help us in generating finances in a way that it will help bringing efficiency for us. So there are two elements of finance generation. One is the generating from outside sources. The second is the curtailing your expenses and improving your own operational efficiencies to ensure that you have access. You can offload your. I would say that areas, offload some of the areas which are not like deadwood which you are carrying, like restructuring, reorganization, and there are a lot of other areas. For example, pension is one of our major liability of 35 billion rupees, and it is really hurting us a lot. And it is a permanent liability for us, and it is increasing every year. So we are working with the financial experts to help us in generating and taking this liability out of our balance sheet and clean our balance sheet in a more way that it is more as Dr. Nadeem Saab was talking about, how will you restructure your balance sheet? So we are working on restructuring of our balance sheet by taking away some of the elements. Right now, this this liability is taken care by through the government's subsidy. So we want to move away from that, and we want to put it in a pension fund where it generates its own revenue and fund is that. Then the other area where we are working is to have the voluntary HS scheme, retirement scheme, where we can offload these pensioners and give them lump sum amount, but that will be on the voluntary basis, because this is a huge organization and we have a lot of challenge, and political factors are also there and the unions are there. So we have to be very careful about that. Now, transformation journey, when I talked about, so infrastructure upgradation on fast track. For that, we are working with, for example, for ML1, we are working with government of China, and that will help us. That's a huge project of $7 billion. And there are lots of other, there's a consortium of financial partners involved. Government of China is major that. So apart from that, we are also part of our transformation journey is addition of new locomotives, and we are encouraging private sector to come and invest in that area. They bring their own locomotives, and we have tried this case and tested, and it's proven to be successful model. It can be done. NLC has bought their 10 own locomotives. So they have their own 10 locomotives. They have purchased it on their own with their own money. Pakistan Railways supporting them with the operational and the mechanical or the overhauling or maintenance of those, and providing them the track to use our tracks. Addition of new passenger coaches. We have already commissioned 230 passenger coaches. Similarly, we are also adding 820 new freight wagons. And with this, I would also like to highlight that we are outsourcing completely the freight business right now. The tender is already floated. We have received the bids, and we are asking we will dedicate the wagons to private parties. They will own those wagons. They will give us, they have submitted their bids for those wagons for different routes, and we are taking away, we will provide them only the end-to-end logistic support, that running and operational support, the maintenance and everything that can be done either by them or us. We are working through that model. Customer centricity is the key driver for growth. Automation. So we are bringing one of the software called Rabta, which is Railway Automated Travel Advisory Booking and Advisory Service. So it is one window solution. It will be also a key driver for our growth. Procurement of RFID based rolling stock tracking system to ensure real time. All these avenues are contributing to generating some finance from one way or the other, either through operational efficiency of saving us money, or by bringing public-private partnership, we are generating money. For example, we anticipate that last year we closed 21 billion rupee through in freight business. With this outsourcing of freight business, we want to close this year, the coming year, which has just kicked off in July, to 30 billion. So 9 billion additional funding generation through this one initiative. So obviously hiring of professionals as a hybrid model, outsourcing of passenger trains. We have also already commissioned a tender of outsourcing for passenger trains for 32 passenger trains, and anticipated revenue incremental from this one initiative is about 6 to 7 billion, another area. So what are the 4 or 5 main sources of funding which Pakistan Railways will be actually working on? So this is public-private partnership initiatives. So we are very active on that. I have mentioned about the hospitals and the schools. We are offloading some of the activities which are our non-core activities, focusing on the core activities. We are working on the branding. We have developed a robust plan for land utilization, and we are working through the government agencies as well to help us on that front. Branding is another area where I have recently initiated with the name of Clean, Green and Beautification of Pakistan Railways. We have 300 commercial stations and 170,000 passengers pass through our network on a daily basis, and 70 million passengers 70 million consumers pass through our network in a year. It's a huge opportunity for corporate sector to come and brand. So I'm anticipating about ₹1 billion through this initiative of branding in the first year, inshallah. So these are some of the sources of funding which we have identified. And the last but not the least, which I have not mentioned, which is not close to my heart, honestly, is the government funding or subsidy. So that's why I've taken a challenge that I will start working on this objective, that we should move away from the reliance on government funding. As far as the bigger projects like ML1 are concerned, that is for sure, but not for the day-to-day operational requirements. Like we are taking 35 billion subsidy from Pakistan Railways to meet our pension part. So with these two slides, I would like to conclude my presentation that we want to develop a customer-centric organization. So this is a chart of showing moments of truth. So right now, when you have initial part is the awareness, social discovery, and then there is consideration to purchase, experience, and shared experience. Presently, unfortunately or fortunately, our customers don't have a choice. Railway, we are the monopoly, so they have to come and purchase railway ticket come what may. But at this stage, their experience is not very good. So they may or may not refer to their colleagues or friends. So ultimate moment of truth happens when brands create love for themselves. So for me, the logic journey for Pakistan Railway is today, unfortunately, I'm saying these words with a great pain, that at this stage for our consumers, it's a journey of agony, it's a journey of pain. And we want to evolve this organization. My vision for this organization, along with our senior leadership team, is that we want to create a journey of delight for Pakistan Railways consumer, inshallah. And this is not too far distance. And we are working on a 10-year business plan right now, which has never been in the history of Pakistan Railways. It has been more on an operational basis of 1 year. 5-year plans have been submitted, but they were just to meet the formalities. But the management is very serious. Our minister, federal minister, honorable federal minister is very keen, and we have a strong support from the prime minister because he wants to improve the performance of national key institutions. And Pakistan Railways has embarked upon a journey. And with these words, I would conclude, and I will be more than happy to answer any questions. Thank you.
Great, Farooq Saab, thank you very much. Farooq Saab, let me, I'll just quickly turn to the audience, and Johan has some questions. I have some very quick questions, Farooq Saab. Farooq Saab, track access, the business trains have been tried for the last 10 years. I know, for example, Saad Asnuddin has been running after it for 10 years. Other people I know have been running after it for 10 years. It was a great promise, and we still have not been able to do it. So I'm not so sure that you'll be able to do the track access thing. The second thing, I still see there's too much emphasis on sort of, I would say, customer focus and the kind of, you'll outsource freight, you'll do this, etc. But the point is, I don't see much balance sheet restructuring. Everybody knows you are a bankrupt organization. By that, I mean you're relying on state subsidies, not today, but for the last at least 15, 20 years, right? Every year you get a huge subsidy, probably 100, 200 billion rupees. Your pensions are paid for by the state. So state is subsidizing you by a huge amount. Yet railway seems to be very comfortable in terms of, for the last 10 years, I've heard this again and again, track access, freight, outsourcing. And there's casual mention of land utilization. We also know that railway has the largest chunk of land on any public organization in the country. You've got a large chunk of land that you sit on from the state. For example, McLeod Road, Karachi is owned by the railway. Many areas in Lahore are owned by the railway. Pindi, lots of land is owned by the railway. And unfortunately, there's no desire to use that land better. For example, as I keep saying, your housing stock, Mayo Gardens, and so many places, you have the best houses in the country on the best commercial land in the country. There's no desire to restructure that at all. So, I mean, I can't see an organization that's running on a subsidy, but yet does not want to restructure its main asset, which is land. Again, I see you talked about 350 railway stations, 170 million people running through them every day, or 170, whatever. The question is, when I go to your railway station, I've tried it many times, I can't even get a decent cup of coffee or lunch there. I mean, this is the state of mismanagement of the railway station. Honestly, I've tried to sit at the railway station, say I'll have a cup of coffee. I do that at every railway station in the world, but I can't do that here. Your trains, for example, have offered nothing else but, you know, passengers sit there. So there's so many areas that I can think of, and I didn't see that anywhere. So are you going to do anything on that? The next thing that I also want to talk about is, how can you do any of this? You're not even a commercial entity, you're a government department. And you are bound by PEPRA rules. PEPRA rules, will they allow you to do commercial transactions? Okay. So I'll leave it at that, then I'll let others come.
Dr. I'm glad you brought up these things, and what you have brought up, I fully agree on certain points, and I have a different view on certain, and I would like to address one by one on those. Okay, you are right, absolutely, that track access has been tried in last so many years, but we have not been able to successful, and there are numerous reasons for that. And I'm not going to go into that details, because then the discussion will be too longer. But there are few areas which I would like to highlight, because we are a public sector organization. So as you have rightly mentioned that we are governed by certain PEPRA rules, I want to do a lot of commercial things which can generate quick revenue for Pakistan Railway, but I can't do it because I have to go through a certain process, right? And I have to go through a tendering process, and commercial activities can't be done that. As far as the land utilization is concerned, Pakistan Railway is very serious about land, and we have developed a comprehensive land utilization plan. The challenge which we are facing is that there is a restriction on us by Supreme Court of Pakistan that we cannot utilize the land for commercial purposes. So we are working through Supreme Court. We have filed a representation that we are a loss-making organization if we are not allowed to do that in a certain manner, in a certain structured manner, following all through the PEPRA rules. Survival for this organization will become difficult, and it will again remain on the oxygen of the subsidy from the government of Pakistan. So the Supreme Court has now been a little bit receptive. And I will quote you one example. From 2013 to 2018, we were able to generate about 550 million revenue from branding activity by just giving our sites branding rights to outdoor media agencies. But Supreme Court banned that. So it was a smaller revenue, but we completely banned that, whereas the others were utilizing it. And we again went to Supreme Court, and we said that whatever structure or whatever guidelines you give to us, we will follow that. We won't put structures, but there are walls available at a prime location, which other companies, private sector organizations, private buildings are utilizing those walls and generating a lot of revenue from those areas, but we can't. So Supreme Court has promised to look into that, and we are waiting a decision on that. Now, as far as your concern is concerned about the that you can't even get a decent cup of coffee, I fully agree with you. And this is where I have recently taken an initiative, and in next week you will see an advertisement from us. We are inviting MNC and local brands to come and establish their outlets at our prime locations, our stations, and like they can start with 5 or 10 stations. We are talking to the organizations like Gloria Jeans. We are talking to the organizations like McDonald's of the world. I can't bring them directly. They have to come through a competitive bidding process, because I'm a public sector organization. but you will soon be seeing these ads. So, so this will take care of the area which we have invited corporate sector to come and help us in transforming our station into a commercial activity or hubs. Like in the world, when you go into New York or into UK, you will see the train station is actually a commercial activity place. It's like it's a trade center. It's an experience for consumers to walk through. They can shop around. They can do whatever they want to. There are ample avenues available for consumers. So we have requested one organization or two organizations to help us in transforming one or two model railway stations, and that will actually give impetus to other corporate sector organizations to come and join hands with us. As far as branding is concerned, I'm getting very positive vibes from the government, from the private sector, and they have been very kind to us, and soon we will be, inshallah, getting a very good response from them, and that will also help us in generating a substantial amount of revenue. So you can imagine how challenging objectives I have kept for myself, that in 5 years we generated only 550 million revenue from this, whereas for 1 year I have kept a ₹1 billion target, and I'm sure this is doable because I have come from a corporate sector. So I have a strong belief that companies like Unilever, Telenor, for them 200-300 million commitment for a network like us is not a big deal for them, and they will get the mileage out of it as well. Today I spoke to the CEO of Telenor, and he was very receptive. Irfan Wahab Sahab was very receptive. He said, yes, it is our asset, and we will definitely come and support you and get them. So he has engaged his team. His team is in contact with us. So land utilization, we have developed 3 projects, and right now we are also working on 2 areas, whereas we are utilizing our lands for developing new ports, dry ports, or the container terminals, for which will help us in generating revenue, as well as improve our freight operations, which will increase the freight revenue as well as it will also bring the private investors to invest in those ports and generate revenue, and also help us in transporting more freight through that our operations will become smooth. So there are numerous projects which we are working right now, and land utilization is one of our key agenda, and it is very close to the heart of the Federal Minister Azam Sawati Sahab, and he's personally looking after this area, and he's personally taking keen interest, and he has requested Prime Minister to help us in this matter, and Supreme Court has also been approached to assist to be more softer to us, and they can approve our projects, and
okay. But Farooq Sahab, question still remains. An organization that is in deficit, that has been accepting public subsidies for over 20 years.
Yes.
The officials of that organization live in great comfort. 1-acre houses, lovely, looked after, servants, everything. And you don't include that on your balance sheet, which is kind of bizarre. You failed in a public-private partnership, the Royal Palm Golf Course, you failed in that. That is why the Supreme Court is upset in taking all these decisions. But we leave that. I think railway needs a very strong restructuring. And until it's the commercial entity, we can't take the restructuring seriously. We'll talk about it in a later seminar. Let me bring in Johan. Johan had some questions, then I'll go to the floor. Johan, are you there?
Is he on the line? Johan? Okay, we can take another question and come back to Johan later.
I think Johan is there.
I can see 2 hands up. I can
Johan
see
is
a hand of.
Hang on, Johan is doing it. Johan?
Yeah,
go ahead.
I'm back, yes.
Go ahead,
sorry,
Johan. Just say your questions so that Farooq Sahab can answer them. You had some interesting questions when he was on.
Okay, basically on the cost side, I just don't see any of the asset depreciation or the cost of the asset coming through on the cost analysis. I just wanted to see how that is accounted for and how that is recovered. And then a specific question on the hospital train. In South Africa, we still have a hospital train, although that has been completely taken. The railway still runs the train service, but it's actually been given around to another department of government, specifically looking after the rural infrastructure and that. I mean, that's where the railway actually has access to some places that's not accessible by road, where the train would go and stand in the siding for a week and service. So again, that public service is being run, but the only benefit going through to the hospital train is really a free access fee, not a full train that's maintained on behalf of the hospital. So the big one there, then just on the access fee per se, and the privatization with the focus on the 800 plus wagons. My question there would just be the split of the risk and the revenue. And it's just a basic question that comes up that you need to ask. And it is, who actually takes responsibility for that wagon when there's an incident? If that question's answered in the agreements, I find that the structuring falls in place very simply. You know, if that wagon derails, would Pakistani Rail be responsible? What level of investigation? Who insures it? Who's carrying the risk? The transfer of the commercialities usually happens very easily. It's a transfer of the utilization and possible incidents. I mean, going to a derailment site, the operator always blames the infrastructure and vice versa. The train driver didn't overspeed it, and that's the basics that comes through. So it's just one of the things learned through the years is answer that question, and you find that you've covered a lot of ground just as that question unpacks the realities of what's happening on the ground.
Good, great. Farooq Sahab, before I come to you, let me take the two other questions, then we'll come back to you.
Okay,
Saeed Akhtar Sahab. Saeed Akhtar Sahab.
Yes, sir, I'm here.
Please introduce yourself and ask your question, please.
Okay, I'm Saeed Akhtar. I have served the railways for almost 35 years and retired as Chief Executive of Pakistan Railways in 2012. So basically, civil engineer and MBA from now, so I have a bit background also for that purpose. So I have two things. One, I want to clear a perception about the lands, which Nadeem Saab also mentioned and Shaikh Saab also mentioned. And Nadeem Saab particularly stated that railway people resist the commercialization of land. I have been associated with all this process during last 20-25 years. I can say with confidence that nobody, no railway person is resisting that. What are the actual problems? We must identify that, and then we'll be able to solve it. Supreme Court is a later phenomena which has caused the obstruction, but before that, provinces and railway ownership of the land was the major issue. Wherever railway tried to commercialize the land, the provinces, particularly Punjab and Sindh, they resisted heavily and they did not allow it to happen. At the same time, if you recall, during the time of people, when army people were managing it in 2001, 2, 3, 4, there was an aggressive commercialization of land. And in spite of their good intentions and all, no resistance from railway, almost all the initiatives either failed or landed into the courts. So I think there are certain other reasons where you can appreciate that as a railway man, I would like to see our railway stations like any stations of the developing countries, good commercial areas, all that. But how to do that? That is a question. Who will do that? And then, very interestingly, These jobs are sometimes entrusted to Pakistan Railway people who have been maintaining tracks, who have been maintaining locomotives, who have been running the railways, trains, and they are asked to commercialize the lands. What is the expertise with them? This is a specialized job, should have specialized people. And if you will not put the appropriate people on the job, definitely it is going to fail. This is one aspect I wanted to clarify. Second thing is about Farooq Sheikh Sahab. Okay, you are welcome on railway and you are here with good motivation and good intentions. That's very good. But what I want to point it out that whatsoever initiative you have indicated, they are all very good. And I assure you, these have been tried in the past 25 years. You just go through the history of these initiatives in the Ministry of Railway. You will find file about every aspect, and then you must analyze that why are those failing as track access? Why track access could not be implemented during the last 7 years? Kindly look into it, and if you will not find any reason, then you will not succeed ever. Similarly, commercialization, schools, for example, schools were once privatized properly, but then again it failed. There are many initiatives. So what I would suggest is that whatsoever you want to do, please go ahead, but just take the history of that in the past, what have been happening in that field in 20-25 years, and then remove the bottlenecks, remove those bottlenecks which were resisting it, and then go ahead. And third thing, that when we want to attract customers, when we want to make a attractive organization for customers, passenger or freight, the prime foremost requirement is the safety and perception. Our safety perception is not very good. Our quality of service, not good at all, rather not acceptable. People are always criticizing about passengers' quality of food, the punctuality, and now the increasing number of accidents, which is something threatening. So until unless we do not address these issues, you expect the people will start attracting towards the railway. I think it is asking too much from the passengers and freight. And that is a very important area to be addressed simultaneously, or maybe on more priority for that matter. So my brief advice that just go through the past experience, learn from them, and go ahead with that. Thank you very much.
Thank you, Saeed Saab. Dr. Samiruddin.
I saw another hand of
introduce
Noman
yourself
Nabi.
to everybody.
Noman Saab.
Yes, thank you, Dr. Naeem. It's Dr. Samiruddin from NUST, Islamabad. I want to ask a little bit, some already discussed by Mr. John and Mr. Said, what I was going to ask, but there are a few more things. Why this railway run for which people? Who are going to attract? Who you are going to address? The people. We have different classes, users as per the users. We have higher class, middle class, lower class. Mostly the lower class people travel on the railways. Why there is a perception? Why you don't have a digital platform system? You're talking about digital. Why don't you build a system for the tickets? The first thing in the journey is to buy the ticket, and then you will see how your trip is going to be placed later on. If the ticket you can't get in a very easy manner, then how you expect the people from other like middle class or to use that mode of journey? If the Uber, Cream or Bike or anyone go to the digitalization of the buying the ticket, then how long the railway need 10 to 15 years maybe or more to go for the ticket machines? You're talking about transportation policy. In Pakistan, we don't have any transportation policy at the national level. Yes, we do have strategies and intervention. We build road on demand and predict and demand, but we don't do anything on the demand management. So we don't have any transportation policy, first of all. So yes, we do working on the interventions. Automations. You're talking about privatization of the lands. Why always you talk about the lands? Why not you, given the example of the UK, go to the Waterloo station, Baker Street, and all those stations. You see the trains running by the private organization, not by the government agencies. Why not you privatize, thinking about the private? If you want to privatize, why lands? Why hospitals? Why this? Why not the coaches and the wagons? Give to the NLC. Okay, who have the money? Okay, give it to them.
Okay,
And
good.
they will generate revenue. There are a few questions, I hope, and rest
Thank
of
you
all
very much.
mostly covered.
Thank you very much.
Okay.
Noman Saab, is Noman Saab there? Anybody? No, I think he's gone. Ji Farooq Saab, go ahead.
Okay.
Farooq Saab, go ahead. Noman Saab. No.
Assalamu
I
alaikum.
think
Assalamu alaikum.
Acha, Noman Saab is here. Sorry, Noman Saab, go ahead.
I'll take a couple of minutes. I fully agree with the observations of Mr. Nadeemullah, Mr. Sameer, and Saeed Saab. Sheikh Saab, आपकी बातचीत से I felt that
Can you speak in English, please? Noman Saab, English, and please introduce yourself. Please introduce yourself.
I'm a communication practitioner for over 30 years, and I've been doing many firsts in Pakistan. I'm the only Pakistani and probably the third in the world to have been granted twice permissions by International Cricket Council to hold private cricket. That's it. Now, coming back to the core thing, Sheikh Saab, it seems you come from a marketing background because I heard you continuously talking about consumer centric, which is a very marketing oriented phrase. I have a personal liking for railway because two of my uncles, one has been the chairman railway board and one was general manager railways. And all my childhood, I traveled either on train or on boats in the rivers. I could always see that railway was a preferred mode of transportation for people. And we are 220 million people in this country. Railway should have been a preference, but it has not been a preference. It is not a preference anymore, primarily because you yourself highlighted the barriers in its growth. Now, having heard everything and having read everything in this presentation, I just want to ask Sheikh Saab, how comfortable are you on the transformation journey initiatives you have highlighted, which to me could be music to ears or daydreaming? And plus, the most important thing is there is a roadmap in place, and as some participants highlighted, that these roadmaps have always been there for the last 70 years or 75 years. I myself know, frankly, that branding attempts have been made over the last 10, 12 years, but none succeeded. So the most important thing is, how will you implement all these, even if we take one by one? I think the biggest drawback the railway has is its image. Everyone pointed out, besides land and all those things, hospitals, I think, were primarily created for the railway staff only. But like everything else.
Thank you, Noman Saab, and I appreciate that you have brought up this again. I've tried to address earlier as well, but this gives me an opportunity to highlight few areas which might have missed out earlier. That implementation is always a key to success. There's no doubt about it, and I'm a strong believer that we need to make it happen in come what may. So now, as long as the roadmap is concerned, I would like to point out that I also saw a lot of emphasis on land utilization, or that is the one very small area. For me, biggest challenge is not land utilization. For me, biggest challenge is the cultural change within the organization.
Sir, you have to bring customers. You have to bring customers, sir. The most important
thing is let Farooq sir. Let's not have a conversation. Let's just keep going.
Sorry.
So for me, the biggest challenge is the cultural change, because cultural change of this organization is the only, to me, as a professional marketing person as well as a business management person, is the solution to all the problems. Because once the organization is transformed into a new modern organization, like in the world railways have transformed, then we can address all the issues efficiently. Because when I joined this organization, when I started talking about new initiatives, there was always the starting point was, ये तो हो नहीं सकता, ये तो हो ही नहीं सकता, ये तो past में हुआ है, fail हो गया. So that was the biggest challenge for me, to convince the even the senior management people, because they, as rightly pointed out by Nadeem Saab, people are in their own comfort zone because they are enjoying life. With due respect to all my seniors, ठीक है, जिस कोठी में हम लोग हमारे रेलवे अफसर रहते हैं वो शायद कोई और अफोर्ड भी नहीं कर सकता. 10-10, 12-12 कैनाल की कोठियां हैं. Sorry, I'm sorry. So these are big houses where they are living and they are enjoying their lives. So for them, रेलवे में अगर कोई नई भी चीज होती है नहीं, so they don't, some of them don't feel pain. So we have to create that sense of ownership within the organization first. So for me, internalization, sense of ownership is the biggest challenge. Outside, I can take care of it very well. Customer centricity will automatically take care. When we will have the pain for the organization, when we will be I will have a sleepless night when one of my passenger is having a sleepless night in air conditioner and his AC is not working. Then I should be responsible. I should feed that pain, and that is the area where we are focusing upon. We are bringing in fresh people, and as far as the professionalism is concerned, rightly said that land is not my cup of tea. I'm not a land expert, so that's why we are bringing an expert on land. Advisor land, we are bringing, so there are 6 new positions have been created. Just imagine this organization does not have the CFO position. CFO position does not existed within this organization. Then you are talking about balance sheet restructuring. Who does the balance sheet restructuring? Obviously, the CFO, primary role of CFO is that. But this organization, the CFO has just joined this organization 15 days ago. We had accountants only managing numbers from taking payments and receiving payments and making payments. That's it. This organization does not have a professional people in terms of certain areas. So advisor land, advisor legal, there are a lot of legal issues pending, because everybody, whenever there is a dispute with land, people go to the court and take estates, and the matter is pending for a number of years. So we want to clean that slate. So then there is advisor business planning. We have brought in first time the advisor HR. There is no concept of HR here. We had a personnel officer. His job was to do the transfer and postings. Capacity building, we are on capacity building. And the fourth area where we have invested is the technology part. So we are bringing, there is an advisor IT on board. Soon he will be joining as well. So these 6 positions have been created, and these are all people from professional backgrounds, hybrid model. From they have been proven, they have been individuals successful in their careers with 20-25 years experience, and they are here, and that is the core team along with the existing team of which are the technical people. And our main objective, the other main challenge is the commercial sense within the organization. The commercial sense within the organization is missing. People don't even realize that we are losing money on certain things, and there is a sheer waste of money going. Negligence is going on. So as far as Noman Saab, your question is concerned, the simple answer, 3-line answer to this is there is a political will, number one. In past, railway has not performed because of the lack of political will. There has been change of governments. The next government comes in, it's changed completely. There's no long-term strategic business plan, which is made and then followed through. So there is a political will from top to the prime minister level, to the minister and the chairman, the CEO. They are all dedicated officers. Our CEO is Nisar Memon Saab is a thorough gentleman. He's committed professional, railway professional with high level of integrity, and he's committed to transform this organization. And he's building up his team.
Thank you very much, Farooq Saab. Johan, any last words from you? Johan?
Yes, the passion with which you all speak is very inspiring, I must say. If this gets channeled in the right direction and everybody works together, I can see the we have this chat in 3 years' time, it's going to be a different organization. You know, I like the talk around implementation and not just planning. And yeah, it's a focus on how do you get the business to work. And as I presented, the business is underpinning any finances. And yeah, it's scary for me to hear that there's no CFO in the railway. It's the railway is a big business, and you can't just run that with paymasters.
Yes, Johan, thank you.
It
It's big
doesn't
business
work.
indeed. But unfortunately, big business can't be managed by advisors. We need serious corporate restructuring in the railways. In particular, it begins by railways being a business.
Yes, hello.
Build the cat. Rail
Sorry, Nadeem Saab, we lost your voice. Nadeem Saab, we lost your voice.
Yeah, there seems to have been a break in the network connectivity there. From my side, just thanks for the opportunity to talk to you and to share. I have a hard stop now. It's 5 o'clock our time, so appreciate the time and appreciate the opportunity, and lots of luck with what you are doing there.
Thank you, Johan, on behalf of PIDE and Dr. Nadeem Al-Haq. Thank you, everybody. We have another webinar lined up in the railway series, which is on institutional arrangements. We look forward to your participation in the next webinar also. Thank you so much, all of you.
Thank you for PIDE for providing us an opportunity, and we are there to support you for any future seminars as well. Let us know. बस यार चलें. Thank you.